All right, what's up, everybody? Again, it's Lane with F Street here. We're going to be talking about how F Street closes on industrial acquisitions today. So there's a lot of steps to this. I will admit it's not rocket science. We're not geniuses over here, but it does take a lot of hard work, sourcing, networking, problem solving, and negotiating. So we're going to be going through a few of these steps today. If you do have any questions, please feel free to drop something in the chat, or you can wait till the end. We'll do a short Q&A. We really will be going through this at a high level today, so nothing super in depth, but if you do have any questions on anything specific, again, please drop something in the chat or feel free to shoot me an email after this, lane@fstreet.com. I'd be happy to hop on a call with you or run through anything, any part of our process. So yeah, without any further ado, let's get into it. So there's a few steps that go into how we source, analyze, underwrite, and close on these industrial acquisitions. The first step is we have to source the properties, right? So there are two major ways you can do this. The first way, which is about 80% of the time how we find these properties, is through our broker connections. So we're lucky to have a lot of great brokers, not only in Wisconsin, but the Midwest and the rest of the US that we have great connections with. This is where networking is extremely important, staying in touch with these guys. They're good at their jobs. A lot of them are hustlers, but they have a lot of people that they're reaching out to every day. So we want to make sure that we're staying at the top of their mind. So we make sure to have these good relationships with brokers, and then they in turn can send us these properties that are either new to market, maybe have been sitting on the market for a while and they see there's some value here. Maybe we can offer a lower number than what's listed, or maybe something that's off market as well. That's the first way we find properties. The other way we can find properties is online. Again, it's not rocket science. One site we like to use is Crexy. So if we can share my computer screen here, I can show you what we look at when we're looking through Crexy. Very simple example here, but let's go through some of these filters that we can use to search for specific properties. So let's say what we're really looking for is Class B and C industrial. We're not looking for something that's new. There's not necessarily much value in that. It's great if you're maybe a 1031 investor and you'd like to get cash flow, but we're looking to create value for our investors. So we're looking at maybe Class B, Class C. Now, we don't want to waste our time on buying a 10,000 square foot building because that's not really what makes our investors money. So let's call this $75,000 for minimum square footage, and we'll say the maximum is 1 million square feet. Not 10 million, 1 million. There we go. Outside of this, we will just use those filters for now. Actually, let's call occupancy 75% or less. So now it has 265 listings for us. It's asking if I want to do that daily. It will spam me with a lot of emails if I say yes. But we are now looking at all the properties that are available within those guidelines. So a lot of them will be unpriced. Some of them will have some pricing guidelines here. Some of them really don't match exactly what we're looking for. This is a truck parking lot, but you get the idea. We will go through here when we have some spare time and just see what we like. This looks like an interesting building. We'll click on this really quick. This is in Alabama. We do have a buy box, actually, which really gives the specifics of what we're looking for. And one of the items in that buy box is not to purchase anything in a few states. Alabama is unfortunately one of these states, so we wouldn't actually look at buying this. But just for an example, it's 156,000 square feet, industrial property, Class B, built in 1990. A few things we'll look at. It has 10 loading docks, so that's great for a 150,000 square foot building, and it's got a clear height of 24 feet, which is also awesome. A lot of times you won't get all of the information on Crexy that you need to do, so we would look up these brokers right here. Crexy makes it really easy. We can call them, sorry to dox whoever that is, but we will give him a ring and ask him what the low is on the building, ask him what he knows about the market, which I'm sure he's probably a market expert, assuming he's licensed there. And we'd move forward in the process. So that's really how we find properties. It's a pretty simple approach. That's what we spend the least time doing. We look at tens of properties per day. I probably look at 15 properties a day by myself, and our team looks at 30. So we're able to look at a lot of properties. We know what we have an idea might work, but after we find the properties we have to know that we like, we have to know what's going on in that market. So the first way we can do this is by depending on our brokers. Again, like I said, these brokers that are specific to these markets will definitely have a great knowledge of these properties. Say we have a broker in Minnesota who's recommended a property that he's heard about in Iowa to us. Now, he might have some knowledge of the market, but we'd ask him to recommend somebody to talk to in that submarket. If there's not a great source that we can find, we can also use CoStar, which is a paid application that will give us some good reports. Not as great as talking to a broker, but it'll give us some good reports on markets. So we can take a really quick look. This is just a generic report. We did it on Beaver Dam, Wisconsin. Not a ton going on industrial-wise in Beaver Dam, Wisconsin, but there's some. These CoStar reports will go ahead and show us net absorption, net deliveries, vacancy. These reports are usually pretty accurate, but not fully dependable. It'll give us some of the economic summaries, manufacturing, trade, what types of workforce they have in the area. Let me scroll down here. These reports are massive, so excuse me as I scroll. But this is really what we're looking for here. It'll show us all the property comps in the area. It'll show us the low, median, average, high square footages, rents of the buildings. It'll give us the clear heights of each of these. We try to find a few buildings that are extremely comparable to the specific subject property that we are looking at. And from that point on, we use the metrics to infuse in our proposal to our potential seller. So those are the ways we are understanding the market. Once we've done that, we have to determine the narrative for the property. So when we are determining the narrative for the property, it's really like, how are we going to add value for our investors? A lot of them are pretty simple, like a building is vacant and the narrative is that we purchase the building and we lease it up and there's the value that we create. We buy it for a little bit, we lease it up, building's worth a lot more at that point. So that's really simple, but the narrative gets a little bit more in depth, like, do we refinance after we find a new tenant or do we flip and sell? Do we buy it with all equity because it's only $2 million and then once we find a tenant, we then finance and then we can cash out our investors? Or are we buying a building where a tenant has 3 years left on their lease, but we believe they're $2 below what market rents are? Then this is very similar to what we did in Granger, Indiana. We can then assume that we can get either that tenant to market rate rents once their lease is terminated, or we can find a new tenant. And when we do go to find a new tenant, we make sure that in our S&U, in our development budget, in our acquisition budget, that we plan for the cost of lease. So we have to plan for tenant improvements, leasing commissions, et cetera. There's a lot that goes into that, but we always need to determine a narrative prior to actually moving forward to the underwriting portion, which we'll get to now. So I prepared just a very generic underwriting scenario here. We'll look at 1234 Main Street, downtown Wisconsin, USA. This is the spreadsheet that we use to underwrite, although this is a completely made up deal. It would be an awesome deal if it were real, but it's not. So I'll just give you a very high level. This sheet works for both our acquisitions and our developments. It's kind of an all-in-one here. I'm happy to walk anybody through this in depth if they want to learn more about it. But yeah, so we enter our assumptions, we enter how long we think we'll hold the building for. Right now we're saying 60 months, so we're holding the building for 5 years. We're saying what month do we think we'll close it on, which is June 1st here. And then our expense, income assumptions, everything so far, and limited partner waterfall, et cetera. So this is all kind of boring stuff, but it's all inputs that really do impact the deal. Again, if you have questions about it, please drop them in the chat. Here's the important thing. So we're looking at rents with our tenant. So in this scenario, we have 2 tenants in the building. One tenant has 200,000 square feet and tenant 2 has 100,000 square feet. We're going to say that 450 is about market rent here, maybe $5 for this area in downtown Wisconsin. And tenant 1 is obviously $1 below market rent, and they have 67% of the building. And they only have 24 months left on their lease. So that's our narrative for this acquisition is, hey, once tenant 1 is terminated with their lease, once they're up, we're going to try to get them up $1.50, maybe $1 in rent. That's the value that we create with the building. We can then refinance for a better value, or we can sell the building and cash out our investors fully. What we do here then is enter further assumptions, assuming we get to $5 a square foot. We have some leasing commissions built in. So our cost to lease would be $860,000 with leasing commissions and tenant improvements going down the line. Again, we're getting into specifics here, but that's how we look at each of these deals. We also have our full development budget in here. We have our refinance assumptions, tax assumptions, our pro forma, and investment model, which shows a 50% IRR. If we ever find a deal this good, we'll make sure to call all of our investors immediately. But again, we're not going to spend a whole lot of time on underwriting, just showing you we have a full process for each of these. It'll take me about 20 to 30 minutes to go through a full underwrite for an acquisition. Acquisitions are a lot easier than a full development. There's a lot less going into it, but there still is time and care that needs to go into this, a little bit of expertise, but we don't have a lot of that. Once we underwrite the building, we talk as a team. We decide if this property makes sense to try to invest in. And if it does, then we will go ahead and write an LOI. So an LOI is just a letter of intent. We send it to the broker or the owner that would be potentially selling us the building. And it just outlines the terms for a future purchase agreement. We do what we can to be completely fair to the seller while also still having a good deal for our investors. If the terms don't align, which probably 80% of the time the terms don't align on these industrial acquisitions, which is okay. It's a low hit rate. We then move on. A lot of times we'll get a call 2 months later saying, hey, actually, we want to sell the building at that price. And we say, okay, great. Let's get to a purchase agreement. And then sometimes we don't hear from them again. So it is what it is. And that other 10 to 20% of the time, we are moving towards a purchase agreement on these acquisitions. We then reach the final negotiation stage. We go through our due diligence and we close on the property. So that is the very high-flying overview of how we close on industrial acquisitions. And this time, I'm happy to answer any questions that are in the chat. We'll have a short Q&A session here. But thank you for investing your time with us today. I hope you learned something. I know it was very broad in general, but we just wanted to give our investors a little taste and give you a chance to ask any questions about how we do look at these deals. We plan to have quite a few coming in the near future. We just closed on one a couple weeks ago. We're looking to close on a few more in the coming months. So again, my name is Lane with F Street. If you do want to reach out to me, my email is lane@fstreet.com, and I will sit around here for a few minutes waiting for questions. Yeah, the question is, can I define F Street's buy box? So yes, I can define. I'll just give you some general guidelines that we go by. So we're not looking for Class A. We're looking for Class B, Class C. We're looking to buy some risk, what we call. So that may be buying some vacancy, buying a tenant that is just about to end their lease term. We look to buy the risk, and it's a calculated risk, right? So we're buying thinking that the market's either strong enough where we can sign a new tenant, or thinking that the tenant has really strong financials and maybe they're a sticky tenant, so they're willing to stay longer. They want to be in that building. So that's what we're looking for in terms of the tenant, the market. We're also looking to buy a lot in the Midwest right now. We believe there's great opportunity in the Midwest with low supply right now, and it's a substitute to build new. So we're looking to buy the existing buildings, maybe high Class B, that we know are in high demand for those renters. And I'm actually going to pull up our full buy box here. Maybe I can share my screen in just a second, Peter. Yeah, here, I can share our screen. Again, it's not extremely in-depth. We don't want to corner ourselves into only buying a certain type of building. But in general, we're looking for clear heights of 16 feet plus. More than that is great if we can get in the high 20s or 30s. Now, we don't see that on all the Class B and Class C older buildings. We will see that mostly on the newer Class A built in the last 10 years. We're looking for buildings with 1 to 3 tenants. Anything more than that, especially if it's further away from Wisconsin where we run our operations, it gets really hard to manage. And then we're looking for buildings with less than 20% office, which is most of these industrial buildings that we'll come across. Yeah, I mean, we have in there, we want market vacancy under 5%. That may not always be the case for a building that we purchase. Maybe the market has had a lot of new construction and it's absorbing quickly, but we do have that in our buy box. We want to limit the tenant improvements as much as we can so we don't have to put extra dollars on top of the purchase price. And then reasonable backfill expectations if we're buying vacancy. Yeah, so the question is, if we get a deal that is perfect right in our buy box, what does that mean for investors? That means invest now. If we really do get a deal that we think the stars all align on, I mean, we will do whatever we can to close on that deal. And I think you'll be hearing from us very quickly that we have a great deal here. It'll likely fill up quickly like our last industrial acquisition. Um, I would say 2% of the deals that we come across probably perfectly line up with our buy box and the right price. But that's why we spend a good portion of our day each and every day sourcing these deals. But when that happens, yes, we do whatever we can to get to closing, and we'll make sure to let you know that we have a good one. Yeah, so the question is, what does that look like if a property is a hit, if the stars align? That could mean cash flow for, say that could mean 8 to 10% cash flow for the next 4 years. We found a good building that has a great tenant in it. We don't think they're leaving. It could also mean that we are buying the property at a great price, and we think that maybe because a tenant's leaving and we think that we can backfill it quickly. So we think that buying it for this great price, you're putting a low amount of equity into this deal. We can refinance quickly because we know we can find a tenant to backfill that space, refinance and give investors a lot of cash back immediately. Then you're just creating money trees, as our founder Scott LaRue likes to say. That's what that can mean. It can mean a lot of different things, but really what it means is we think it's a great financial opportunity for our investors. Yeah, the question is Crexy free. They will try to make you pay for it. Don't. No, you can if you want to, but we use the free version and you get plenty of leads from there. All right, thank you. No more questions at this point. We'll stick around for another minute or two, but if you have any more questions on any of this, please reach out to me specifically, lane@fstreet.com. I'll be happy to walk you through any part of our process. We're very open to our investors here. We want you to understand what we do in our process. We think we are going to source a lot of deals coming up here, and we think we're doing it the right way. So we hope you stick around with us and continue to show interest in our investments. We want to be here for you as well. Yes, and happy holidays to everybody, and thank you for your time today.